Hello and welcome. Today we're delighted to have Nathan Tuft, Chief Investment Officer of our Global Multi-Asset Solutions team and Global Equities, and also a Senior Portfolio Manager within Manulife Investment Management. Nate today is going to give us his views and ideas on the global equity market outlook. So welcome, Nate. So another year is upon us. Could you maybe share your overall view on the equity markets for 2026, particularly opportunities across different regions?
Thank you, Paul. It's great to be here. In 2026, we expect equity leadership to broaden beyond just mega cap technology stocks, creating opportunities across sectors and regions. Global economic growth is expected to stabilize, supported by fiscal spending and easing monetary policy in key markets. We expect the global growth profile to remain very strong. In fact, global GDP numbers have been stronger than expected, and guidance has been for improving growth in 2026. We therefore expect the US to remain resilient, while Europe and selective Asia economies offer attractive valuations and improving fundamentals as a complement. In Europe, the growth gap with the US is narrowing, with improvements in manufacturing and industrials, continued expansion in services, increased EU spending across defense, and early cycle green shoots developing. In Asia, manufacturing and tech export economies such as South Korea, Singapore, Taiwan remain attractive, and we see great opportunities in the Asia region overall, while Japan is also offering appealing valuations. Overall, opportunities are expanding into cyclical and value-oriented areas as well.
Great, so that suggests a much broader opportunity set for you and the team to participate in over 2026 across geographies and sectors. But how do you see different styles, for example, growth versus quality, value, and income-focused approaches?
Growth style, particularly in technology and US market, has led for several years and may continue to have momentum. We maintain exposure. However, valuation gaps highlight the relative attractiveness of traditional and quality companies. Value and income-focused securities could also benefit as investors seek diversification and rebalance portfolios. Even though rates are expected to move lower, we still expect them to remain elevated, and therefore an abundance of yield and dividends are on offer. The quality factor, historically aligned with outsized excess returns, could return to prominence in 2026 as investors refocus on companies with strong fundamentals and predictable earnings. All around, we expect to still have meaningful mega forces in place. Geopolitical fragmentation, the energy transition, the AI trade, and potential Fed membership changes will make for a very interesting year.
Thank you, Nate, for that insight. Manulife Investment Management has recently launched a new strategy, the Manulife Global Equity Diversified Income Strategy, or GEDI for short. Could you explain how this strategy is designed to capture equity and income opportunities in 2026?
The GEDI strategy is an equity strategy built for this environment. It holds diverse equity exposures across sectors, geographies, and style, including growth, value, income-focused stocks, aiming for income and capital appreciation, while seeking to minimize downside risk. The GEDI strategy is built upon 4 key pillars that collectively support the strategy's income and growth objectives. The growth equities focus on companies with innovative capabilities and high growth potential, driving long-term capital appreciation. The value equities invest in quality companies with stable cash flows and attractive valuations, providing steady and sustainable returns. And the income equities, which in this case includes high-quality common and preferred stocks that offer stable and attractive dividend income alongside strengthening cash flow. What sets the GEDI strategy apart is an options overlay approach using covered calls and collateralized puts to enhance income capture, while effectively aiming to buffer risk from market volatility. These 4 complementary pillars, we believe, makes for a compelling income outcome, allowing us to flexibly adjust across different market environments and deliver steady and consistent returns for investors.
Thank you, Nate, for your insightful sharing today, and thank you everybody for joining in. We wish you all a successful 2026. We've just heard some great insights from our Chief Investment Officer on how diverse global equity exposures can boost your income and capital appreciation while keeping risks in check. If you're thinking about enhancing your portfolio, please do take a look at the Manulife Global Equity Diversified Income Fund, what we call GEDI. The GEDI Fund seeks to capture broad global opportunities across growth, value, and provide a steady income with the strategy designed to mitigate volatility through option writing implementation. The Jedi Fund targets a fixed annualized dividend yield of 10% per annum, offering stable income while seizing equity market opportunities. Thanks for joining us today, and here's to a successful and prosperous 2026 with Manulife Investments.